Can the SPY get to 600 or the S&P 500 get above 6,000? And is this the top for the QQQ or the NASDAQ 100? And can gold get above that 2,500 level? And will we see oil get back above $100? In this video, I'm going to show you some scenario how each one of these could possibly go up to those upper level that we've been asking about. Now, some of you might have seen my video during the Independence Day or 4th of July holiday that I put out a very short video on the Q, and I talk about where the Q might be going, coming up to this price channel here. And today you can see that it actually went above it. And basically what I was talking about on that Q was, here is the, let's use the Fibonacci retracement here. And we basically looking at this right here and saying that, hey, it come up to this channel and it retrace 618. So if it also come up to the top of this channel, and we say, let's say that this is the peak for the swing here. And if we use that to project where the potential pullback might be, and if we say come back down to the 618, then that will be 346, 347 area. And that would be right near this pivot low here, this area here. So you can see that there is a little bit of a potential support here. All right, so basically that's what we are looking at for possibility of a little bit longer term pullback, and be watching for that if, the Q start retracing and reverse from this top here. Now, the other thing that I want to show is the symmetry move. We're basically saying that we could see a symmetry move of this swing here, this move. Okay, so this is, and if it's going to retrace 100% from this pivot low here, you see today it got close to it. This 100% symmetry move is 498.84. That's basically this move here, right? The length of this move, the projection. And you can see right now, and it's pretty close to this 100%. So who knows, right? This could be the near-term top here that we might see a little bit of a pivot, start retracing back down and possibly get down to this area here. Now we take a look at SPY here. The question is, could we see the SPY come up to this 600 area, or basically the S&P 500 move up to the 6,000 level? Let me give you a couple of scenario possibility of how it might get there. So right now we're going to be looking at the first of all is the Fibonacci retracement. I'm going to use the Fibonacci retracement tool here and basically look at the swing from here to this point here. Now notice I do have a price channel here. We're basically looking for the price to move up to the top of the channel. Now you see here on this retracement, it came back down to the 50% retracement level before it pushes back up and come up to today's level is basically is a 1.27 extension here. Okay, so right now we're going to do the same thing. For example, if we project, let's say we are projecting a retracement here from this level here and come back down, right, at this high. Let's say, for example, we see a retracement back down, and let's say come down to this, 50% level, and basically the bottom of this channel, then we got to push up to 127 extension, and that will push it up to that 611, and that will be pretty close, right, above the 600 level. Right? We're basically getting up to this upper channel here. Now, how soon it will get there, who knows, right? But that's basically one possibility of making up to that 600 level. And the other way that we might look at it is the symmetry move from this swing here. Okay, this symmetry move to here. Let's say we're swinging from this pivot low, and here you can see that the 100% symmetry move, the major move. So we're basically talking about this move here, right? We're looking at this extension from this swing to this swing here. Okay, and this right here is the 100% symmetry move, and that could bring it up to this 614.86, and again to the top of the channel. So those are a couple possibility or scenario how the S&P 500 could get up to that 6,000 mark, or the SPY get above that 600 level. Now let's take a look at gold here. I have a 20-year weekly chart on gold. You see I also have a price channel here that kind of marks some of these key pivot points. And right now it's getting close or getting near to this top of this price channel here. So the question is, will it get up to this 2,500 level? Now let's take a look at a couple scenario here. Let me draw in some zone here. So if we have this right here and mark it us off as a little bit of a range that it's been fluctuating for quite a while now. You can see that it's been consolidating inside of this range and just recently broke out. So if I do a major move on this range here and just do a range extension, so let's say we take this bottom of the range and project it up here to the top. And here you can see that the 80% mark is right where it was here a few weeks ago. And right now we are looking at a 100% extension. Then we're basically looking at 2532, somewhere around that area. And that would be up above this price channel here. So in addition to that, let's take a look at where it will go or come back on a possible retracement if it come up to this 2,500. And then we say, well, that could be a near-term top. Let me clear off some of these lines here. Take this off. And what I'm going to do is I'm going to use the Fibonacci extension. And we look at this right here on a retracement. And we see that it come up and it retrace back to 50%. And this happened to be this pivot low here. So if we apply the similar type of a concept and use the Fibonacci retracement tool and apply this pivot and assume that it's going to come up to this 2,500 area, and we see that the pivot at 50% retracement is back near this, this top of this range here. See, this is the 50% retracement, and that is somewhere just under 2060 level. So those are some of the price points that you might want to keep an eye on for this potential move on gold. Now let's take a look at oil. Here I have a 20-year monthly chart here. First of all, I wanted to show you this potential price pattern here. All right, could be forming an inverted head and shoulder pattern. Now, I'm not saying that it's going to go and do a major move and then oil go up to $150 or something, but definitely the price of the oil could come up to this $110 a barrel, in the near future here. Now, you might say that, hey, if we are seeing a weak economy and, weak job market and that kind of stuff, if U.S. is going into the recession, how could oil go up? Kind of defy logic here. Well, don't forget a lot of the export nation, those nation that export oil like Saudi Arabia, all those, Middle East country that export oil is all pegged to the dollar. So if the Fed is going to lower the interest rate because we have a recession or a bad economy, then the dollar will get weaker, right? The dollar will go lower. And in order for these oil export nation to make up the purchasing power that they lose because of the weak dollar, they basically have to increase the price of the oil in order to, compensate for the weak dollar. So that's the reason why I'm looking for the possibility, even under a weaker U.S. economy or in a recession, we're going to be looking at oil coming back up at least this $100 level. So the level that I'll be watching in the near term is basically this level here, this pivot, somewhere around that 85, 87 area. So if it could get up above this, then we'll be looking at a move for the oil be somewhere around, come up to this 85, 87, and it pushes up into this area here around 110. So basically, that's what I'm looking at for oil. Now, if for some reason oil come down and break below the 70 level, then yes, it could come back down to this high volume node here, somewhere around this $50 area. but I don't see that happening. I see that more in terms of coming up, toward that 100 level. But hey, anything is possible. This is one scenario that I want to highlight, primarily because of this possible, inverted head and shoulder price pattern that you might want to keep an eye on a long-term basis. Let's take a look at the sentiment and also the internals here. On the sentiment chart here, we see that the VIX is still underneath the 20 level here and sitting somewhere around 12.5. And also the put call ratio is down at the 0.6 levels. So definitely the market participants are still complacent and also being more than just risk on. And here we could see that the S&P 500 made a new all-time closing high with more down volume than up volume, and also more stock decline in price than actually advancing in price. So that is not a sign of a market making new high. Now we are seeing slightly more stock making new 52-week high in the New York Stock Exchange than the number of stock making new 52-week low. So that is a little bit of a positive. But if we look at the cumulative AD line for the New York Stock Exchange, you see how flat it is, and look at the S&P 500, and it just moved way beyond where it was here, down here at this level. Right now it's closing on a new closing all-time high here. And for the NASDAQ, it also made a new all-time high today, the NASDAQ 100. Although the up-down volume ratio is positive, so indicating more up volume than down volume. So it's a little bit different than the New York Stock Exchange. But the number of stock declining in price outnumber the stock advancing in price. So again, that is not a sign of a strong market that pushes the index to a new all-time high. And here we also see that the number of stock making new 52-week low is actually greater than the number of stock making new 52-week high in the NASDAQ market, while it is making a new all-time high. And here on the cumulative AD line, no need to say much here. The divergence is just getting worse. So until this thing get resolved, and most likely this index going to come down pretty hard when this the advanced decline line get the divergence get resolved. So as you can see, the market, or the S&P 500 and the NASDAQ, is making new all-time high, while there are more stock declining price than actually advancing in price. And also the up-down volume ratio, and also the number of stock making new 52-week low is greater than the number of stock making new 52-week high. So that's not a strong market, and those internal doesn't tell you that the new all-time high in the S&P 500 and the NASDAQ 100 is supported by the bond market. So I'd be very cautious here